Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grevner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
It was a pretty exciting start to the week with the announcement from the Biden administration about their action plan for fair and more competitive markets. We'll get into that coming up in a little bit. We'll also talk a little bit about trade and jobs, but to kick things off, let's recap what happened this week in the markets.
On the cattle side this week, cash cattle were down $1.15. Those feeder cattle markets, I'm going to call them steady to 5 lower, but that's relative to kind of the pre-holiday values that we had there. On the futures side, the February live cattle futures contract was down $2, and the March feeder cattle contract closed down $3.15 on the week. On the beef side, choice box beef prices were $2.90 higher as we had strength in all parts of the box except for ribs. On the hog side this week, barrel and gilt prices were $1.60 higher. The February lean hog futures contract closed down $1.45, and we also lost roughly $1 on the pork cutout value this week as ham prices were lower on the week.
Kind of a not so exciting start, at least to the market aspect of this thing of this week and the new year. We're going to get into slaughter numbers as we talk a little bit there. Obviously coming off of another holiday shortened week, so those numbers are a little bit different in comparison there.
Yeah, that's right. So USDA is telling us for the week ending January 5th, run of 620,000 cattle. That's 83,000 above where we were a week ago. However, relative to the same week a year ago, that's down 32,000. On the hog side, a run of 2.578 million head of hogs this week. That's up 397,000 from a week ago, but down 251,000 from where we were a year ago.
And if you're a regular viewer, we typically talk year-to-year comparison. We're going to hold off on that until we get a couple more weeks into the new year, just to give us a little time there. So just a heads up. So the big report this week, monthly trade data. Man, Scott, as we take a look at these numbers, that beef number continues to kind of hit a home run month after month lately.
That's right. Thank you, China. I think has a lot to do with where we've been. I'm going to talk year to date, so Jan through November 2021 numbers. Overall beef exports, the first 11 months of 21 totaled 3.16 billion pounds of beef. That compares to 2.67 billion pounds for the first 11 months of 2020. You look, Japan was flat, South Korea only up slightly. It was really what was going on to both Mexico as well as China that mattered most. And when you look at the value of beef exports, we've been running, Megan, roughly $300 million a month above year ago levels in terms of value of beef exports. So not only are we pushing more volume, but we're pushing it at a higher price, and those values are even higher. So it's pretty impressive what we've done from a total value perspective on the beef side. Now on pork, a little different discussion. I'm remiss to be too pessimistic here because 2020 was such a strong year because of China, but through the first 11 months of 2021, we're at 6.5 billion pounds of pork exports out of the United States. That compares with 6.64 billion pounds the first 11 months of 2020, so down 2.2%. We did see strength in places like Mexico, some other markets as well that gave us strength, but it was China that for the first 11 months of 2020, we were talking about exports to China, Hong Kong, and Taiwan of a little more than 2 billion pounds, now sitting at 1.15 billion pounds. And even on a value basis, we've seen the last couple of months now what's been roughly $40 million less pork exports in value terms out of the numbers that we've gotten for October and November.
So I want to talk a little bit about this and obviously we still have another month left of 2020 data that we'll get when we talk, a month from now. So as we take a look at these numbers, how much does this set the stage? And does it do we look at increasing our targets 10% more than what we did? How does this play out when we're trying to when the industry is trying to set goals or continue on this type of a pace, especially on the beef side of things, for 2022 numbers?
So I always go, I think there's a lot of uncertainty as we look ahead into 2022 and beef because of China. And we can go to pork as a little bit of an example where, you know, exports in 2020 in 2021, first 11 months relative to 2019 are still 32% above where we were in 19. So we've had a big push of beef exports in 2021. Now, do we see the Chinese taking a little bit of a step back? I'm not calling for that. I think there's still some strength ahead, but I do worry if that trade pace to China does slow, it'll change the dynamics a lot for us in terms of total beef exports. When you see countries like traditional exporting countries like Japan and Korea or our exports to those countries that have been fairly flat. So I always go, once we get on this treadmill of more exports, it's hard to get off that treadmill without creating lower prices. And I think that's much of what we're going to have to continue to pay attention to of, are we able to grow those markets? Do we need to find new markets? It's a continual process year after year after year.
You brought up Japan, and I think there's been some interesting conversation recently with U.S. Trade Ambassador talking specifically, or USTR talking specifically about that safeguard threshold in Japan. How much of that, if there was an adjustment made there, or if it was addressed in a positive way for the U.S., how much does that potentially help us in the long run, especially when we're looking at more potential competition from other countries like Australia, New Zealand in that area?
Yeah, so it is important, and you know, we likely trigger safeguard provisions in March, April, and so as we get to the end of the Japanese fiscal year, so being able to maybe perhaps get rid of that safeguard provision, I think is helpful, because we don't want to face a 38.5% tariff when you have Australian product that will be in the low 20s in terms of tariffs. So we become less competitive, and we already know Australia is likely going to be producing more beef as we look ahead, and are going to try to get back some market share that they lost to us when it was dry weather in Australia. So it is critical. I don't know if that saves us if the Chinese were to decide to take less of our beef in 2022, but it's certainly an important piece of the puzzle to be working on.
Always fun to talk about global demand. I think domestic demand is something that can be equally exciting. This month, maybe not quite as much, as we take a look at this jobs report that came out today.
Yeah, you know, so pre-report at midpoint suggesting another 400,000 jobs would be added. We ended up with only 199,000 jobs, so disappointing in terms of job growth in December. Was kind of the mood, and stock market certainly has been somewhat weak as a result of that jobs report. However, what I'll say, you know, you look at the unemployment rate, it did fall to 3.9%. So we continue to see, you know, more declines there. Some interesting things, you know, you look at wage rates here for a minute. So over the past 12 months now, average hourly earnings have increased by 4.7%. So it tells me we're getting a little bit of wage growth happening. Maybe that's another way to try to attract some more folks back into the jobs market.
When we also talk about that, I mean, we talk about the domestic demand picture. So as we're seeing prices go up in the grocery store, we're seeing gas prices go up as well. I mean, everything is getting a little bit more expensive. How important is it to our continued demand strength that we continue to see strength on the job side of things?
So it is critical. You know, more jobs, higher wages gives those consumers also more money in their pockets. And we know how strong demand has been, and for meat, and let's hope that it continues. But when we're talking about running record prices at consumers, We need all of that domestic new jobs and wages that we can get. That wage side cuts both ways, as we all know, because also higher wages means higher processing costs, for example. But we like consumers with more money in their pockets at the end of the day.
All right. Biden administration announced their action plan for a fairer and more competitive livestock and poultry markets. The day that we can come out with a plan that's very short and easy to remember will be the day that I give everybody a gold star. So let's get to the bulk of this. There's several things that this action plan is addressing, right? Like we're looking at increasing slaughter capacity or increasing competition in the market. We're looking at a product, more emphasis on product of the USA, labeling. We're looking at investments in labor. And we're looking at a portal and a partnership between the USDA and the Department of Justice to address concerns about anti-competitive practices that are protected under whistleblower laws. So as we look at this, everything on paper seems like this is a lot of great things to benefit competition and hopefully improve prices on the cattle market. What do we take from it? What do you as an economist take from it?
Yeah, so I always go, the devil will be in the details. Exactly how that $1 billion is allocated, although we have the big buckets, if you will, of where it's going to be spent. Exactly how each of those buckets are spent is going to be important. I always like to say, so I think one of the things that is hoped to be gained out of this is perhaps more castrated cattle. And if we get, so better price discovery. So I always go, more castrated cattle to me equates to better price discovery. That's always good, that we know that we're finding the equilibrium between supply and demand curves at any given point in time. So that's one of the benefits that I think is pretty easy to talk about as a positive out of that $1 billion. We'll again have to wait and see exactly how much more capacity we get and how much that incentivizes some additional cash trade. I always say labor has been a big issue in these meat cattle processing plants. So being able to hopefully address some of the worker shortage issues that we have makes better utilization of the capacity that we already have in terms of shackle space. And so there are many issues now. I hope folks don't equate better price discovery to always mean higher cattle prices. It only means we get price discovery that, again, reflects the intersection of supply and demand better.
On the labor side of things, I mean, it sounds like there's going to be some good paying rural jobs. Does that help us when we look at strengthening rural communities and helping to make sure that those rural areas are thriving? And how does that have other impacts, maybe improvements in rural healthcare, rural broadband access, so many other things that have been a challenge for folks in those parts of the country?
So I do think there's some opportunity there, Megan. You know, I always say I think it's important in some of these rural areas not to just be focused purely on production agriculture. And I say that not saying anything bad about production agriculture, but all your eggs being in one basket from a rural development standpoint. So if production ag isn't as strong, it means the rural economy isn't as strong. Having some of the allied industries, I think, provides maybe some additional ways to help those rural communities flourish a little bit. We all know there are, in many parts of the country, less people needed to be in production agriculture, to farm the land, to raise the animals that we have. And less people means that's less folks going to the local grocery store, local gas station, et cetera. And so finding those allied industries, I think, helps keep maybe more population base there as well. So there's some reasons to be optimistic about what it does for some of the rural communities across the country.
And it sounds like there are several jobs that are there's funding, or not jobs, sorry, several projects that they're looking to make investments in. So hopefully we start to see some of those details unfold sooner rather than later.
Yeah, that's right. I'm very curious to see when these projects individuals are identified for some of these projects to see exactly, where this $1 billion ends up being spent. I think we'll see some of that $1 billion be going out fairly quickly. And again, exactly what projects are being supported will certainly help clarify exactly how much benefit we're going to see out of the proposal that came out this week.
God, it's always great to chat with you. As we look ahead to next week, the first supply and demand of 2022. What else? What other reports?
Yeah, so we'll also next week get on the demand side, another look at retail meat prices, and also finish next week with consumer sentiment.
Sounds great. We will talk to you next Friday.
Sounds good, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments there. And if you're looking for some great podcast material to listen to, go to brownfieldagnews.com/podcast. Have a great weekend. Happy New Year. I'm Megan Grebner for Brownfield.